Guys, this is S&P 500 weekly technical analysis for the week of October 21st. Means from October 21st, which is Monday, to October 25th, that will be Friday. Now you can clearly see that there is a bullish movement in the market. On October 15th, Tuesday, there was an opportunity to re-enter into the trend. However, this opportunity was not because of the S&P 500 itself. It was because of the Dow Jones. This is the chart of Dow Jones. Now, this was my midweek update on October 16th, Wednesday, and I published this update before the open of the stock market. So, why there was a buying opportunity? It was because of the Dow Jones. The Dow Jones closed at 42,740, whereas the support or the heavy support level was at 42,720. So there was a very heavy support level at 42,720. The Dow Jones came down, tested the level, retraced and closed at 42,740. This was the only reason because of which the entire market, including the S&P 500 and the Nasdaq, sustained and moved up. And in my second update on Tuesday, I've cleared the same thing again to my Patreon community members, 42,720. So this was Tuesday. Then came Thursday. Now again almost the same condition on Thursday, that S&P 500 gave a heavy or a very good red candle, but at the same time it made an all-time high at 5878. 5878.46. But because it came down and closed below the previous high, that was 5871, this is why it was not in a state or not in a condition to give any more bullish movement. Then why there was a gap up open on Friday and why there was a bullish candle on Friday? So again the Dow Jones comes into the picture. On Thursday, October 17th, Dow Jones came into a special condition of bullish breakout, as well as there was open equal to low condition in the market, means in the Dow Jones. And in my final update on Thursday, on October 17th, I mentioned that if there comes a closing in this manner, wherein the Dow Jones closes above 42,980 and also it closes in open equal to low condition, in that case we can expect a gap up open in the market, or irrespective of anything, an initial or intraday bullish movement in the market the next day. And the next day was Friday. So now you can see it here. There was a gap up open in the Dow Jones, but there was a good gap up open in the S&P 500. And then the bullishness the market has gained through this candle on Thursday, its reflection was seen on Friday, because it was surely to happen. So there are a lot of things which I have mentioned in these the updates, and the movement of the market was as was anticipated, expected and predicted through these daily precise updates which I give to my Patreon community members, and the midweek update which I publish every Wednesday before the open of the stock market. So now the bullish movement is expected to continue. There is, as of now, there is no fear to this the bullish movement, and it is actually good for the market, because if it continues to move up, then now the market has started to saturate and has entered into the overbought condition. So when it moves up further, then it will heavily saturate, and there will be heavily the overbought condition, and then there will be a peak, and once there comes a peak, then we can expect some good correction in the market. So when I say that it will remain bullish and or it will continue to move up, so for that to happen, there is now only one condition in the S&P 500. Otherwise, S&P 500 is good. So I will discuss each and everything in detail in this S&P 500 weekly technical analysis. So guys, if you are looking for these daily precise updates of the S&P 500 and the Dow Jones every day from Monday through Friday, and also the midweek update which I post or which I publish every Wednesday. So in order to get these, you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the agenda of this S&P 500 weekly technical analysis. The first point of the agenda is the S&P 500 technical analysis on the weekly chart. So the problem has started to happen on the weekly chart or through the weekly chart, because through the weekly chart the market has entered and is entering, means the Nasdaq and the S&P 500, but the Dow Jones has already entered in the saturation and overbought conditions. Okay, so now through the technicals I will show you that for how long it can remain in this condition, and then when we can expect the correction. Okay, so weekly chart means the long term picture for a month, for 2 months or so. Second point of the agenda is the S&P 500 technical analysis on the daily chart. Now in the short term, because of these two red candles and similarly one red candle in the Dow Jones, the market is not still saturated and also it is not in the overbought condition. This means that through the daily chart the market is heavily bullish, or you can say like 90 to 95% bullish. So through the daily chart, the S&P 500, Dow Jones and the entire US stock market is allowed to move up without any problem. Okay, the problem is happening or has started to happen through the weekly chart. So daily chart means the short term picture. So through the technicals I will show you. Okay, this is the bullish movement. The third and the last point of the agenda is the probable movement of the SP 500 from October 21st, which is Monday, to October 25th, that will be Friday. Whatever is going to happen in the S&P 500 in the next week, bullish movement, bearish movement, bullish conditions, bearish conditions, levels, zones, percentage movement in the bearish side, percentage movement in the bullish side, the conditions which will trigger bearish movement or bullish movement, everything I will discuss in this, the last point of the agenda, that is the probable movement. And guys, once again let me remind you that all of these three sections are interrelated or are interconnected. Okay, when I say that I will discuss the probable movement here, so when I reach to the point number 3, then by that time I have already discussed 30 to 40% probable movement in the first and the second point of the agenda, because I analyze the candles and the patterns. Okay, so that is why it is recommended that you should watch all of these, the three sections, in order to understand what is expected to happen in the market, in the S&P 500, Dow Jones in the next week. Now guys, I am going to discuss the first point of the agenda, and this is the weekly chart. W as in weekly chart. Weekly chart means one candle represents 1 week. Okay, not 1 day or 1 hour. Now let's first analyze the candle. But guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you're looking for these daily precise updates of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. And if you want to make 5% to 15% or more every month, then you can learn these hacks, 4 to 8 stock market hacks with modified technical indicators, and these hacks works almost 100% of the times. So when you visit my Patreon page, then go to the shop option and there you will find these the products. Now let's first discuss the candle. So it's simply a bullish candle. Okay, there is no defined shape or anything, and also it's a small bullish candle. But the important point is that this bullish candle has formed after 1, 2, 3, 4, 5 bullish candles. So this bullish candle indicates continuation of the bullish movement. Okay, so if there would have been a doji candle, okay, or any bearish candle or any kind of bearish candle, in that case we would have expect a gap down open on Monday. And in my final update on Friday, I mentioned that if the S&P 500 closes in this manner, in between 5830 and 5815. And remember, these are not my calculated support level, but if there comes a closing in this manner, then there will be a heavy bearish condition through the weekly chart, and this can force the market to give a gap down open, or irrespective of any open, an initial or intraday bearish movement. However, that particular closing was not seen, which is why the market is safe. Now, Dow Jones. So Dow Jones is in much better condition as compared to the S&P 500, because if you notice, the candle of the Dow Jones, the weekly candle of the Dow Jones, is heavy as compared to the S&P 500. And again the same condition, 1, 2, 3, 4, 5, 6, sixth candle. And in most of the cases, okay, in this kind of cases, there is a pattern. Okay, this pattern says, I'm not saying always, I'm saying most of the cases, especially on the weekly chart when we analyze the S&P 500, Dow Jones, or the indices. Okay, and it is not just related to the US stock market. Okay, if we also consider the European stock market or the Asian stock market, okay, and the indices, the prime indices of those stock market, then these conditions, the patterns, okay, the patterns are generally followed everywhere. 1, 2, 3, 4, 5, 6, the seventh candle. I'm talking about weekly. I'm not talking about daily. I'm talking about weekly. The seventh candle. Okay. It is generally seen, whatever will be the color of the previous 6 candles. The color of the previous 6 candles will be seen on the seventh candle. Okay, or in simple words here, that the seventh candle, which is expected to be seen in the market for the next week, it is expected to be green, and I'm talking about the weekly candle. Okay, now I'm not saying that there will be a very heavy green candle, okay, or this kind of or that kind of candle. No, I'm simply saying just a green candle, whether there comes a very thin candle, very little candle, or very heavy candle, doesn't matter. Okay, and again, this is not seen 100% of the times, but most of the times. Okay, there's a pattern, it says most of the times. But remember, when I talk about these the hacks, 4 or 8 hacks, okay, then it happens 100% of the times. So this is the pattern analysis. But in general, okay, the Dow Jones, this candle, last candle, is a heavy bullish candle, indicates a continuation of the bullish movement, as simple as that. Okay, the same continuation of the bullish movement we have seen in the S&P 500, okay, and it is also there in the Dow Jones. So this means that market is expected to remain bullish, expected to sustain bullish. There is only one condition in the S&P 500, and because of this bullish condition, bullish momentum also, I think that S&P 500 might struggle a little, but it should be able to breach, okay, that the mark, and once it breaches that mark, then the market will remain bullish. Okay, so this was about the candle, okay, and the pattern analysis. And okay, now let's talk about the technicals. Now technicals, so through the technicals, okay, here you can clearly see on the weekly chart, S&P 500 is bullish through the moving averages, okay, clearly bullish through the Bollinger Bands, bullish through the Ichimoku cloud on the weekly chart. Now the other technical indicators, MACD is bullish, clearly bullish, okay, and also positive, and the stochastic RSI is bullish. And if you have subscribed to my YouTube channel for last many months or years, then I've again repeatedly mentioned that whenever these two are aligned to a particular direction, then that direction becomes the direction of the index or the market. Okay, so now there is no conflict, both are bullish, means there is bullish momentum. Okay, and also here the S&P 500 is saturated and overbought. Okay, but it has just started. It is not that the heavy condition that it will fall. No. Okay, that may come later, like after I think 2 weeks. Okay, 1 to 2 weeks it will take minimum. Okay, otherwise it is expected to remain bullish. Okay, that's not a problem. So on the weekly chart, S&P 500 is 100% bullish, okay, or absolute bullish. And when I analyze the chart of the Dow Jones, same Okay, moving averages bullish, Bollinger Bands bullish, Ichimoku cloud bullish, and the best part is the MACD of the Dow Jones. Okay, it is much more stronger as compared to the S&P 500. So MACD is bullish, stochastic RSI is bullish, and again the direction of the market. Okay, bullish momentum, and again the same Dow Jones is in the saturation and overbought. Okay, so it has recently hit the saturation, but again the saturation is not that heavy that it is going to give up immediately. No. Okay, so that condition is not there as of now. So Dow Jones is also 100% absolute bullish on the weekly chart. So now if everything is bullish, absolute bullish, then what is the problem? The problem is that for now S&P 500 has started to saturate, but Dow Jones is already saturated and overbought. Okay, but yes, I agree that as of now the situation is not that bad where we can say okay the market is going to come down. But if there comes a good or a heavy bullish candle in the next week, then S&P 500 will be very near to the 5900 and not very near to 5900, but it will be able to breach and move beyond 5900. Whereas the problem is actually in the Dow Jones. There the Dow Jones is now heading to its very heavy, extremely heavy resistance level. Okay, so if you are my Patreon community member, whenever it reaches near to that level, okay, I will mention that very well in advance so that you can prepare yourself. It is heading to that very heavy resistance level, and once it reaches to that level, if it reaches to that level in the next week, in that case we can expect struggle. Okay, and then 1 or 2 daily candles. Remember, this is the weekly chart. Okay, in 1 week there are 5 days. Okay, so if it reaches or whenever it reaches to that level, then we will expect some struggle and some fall, but any fall that will be limited. Okay, but eventually through the pattern theory, okay, pattern concept, the 7th weekly candle is expected to be bullish, but it is not 100% true. Remember, this is not 100% true, but it happens most of the times. So the saturation, overbought, and this heavy resistance in the Dow Jones, not in the S&P 500 but in the Dow Jones. There is just one condition in the S&P 500 that I will discuss later. Now guys, I am going to discuss the second point of the agenda of this S&P 500 weekly technical analysis, and this is the daily chart. And here one candle represents 1 day, not 1 week or 1 hour. One candle means 1 day. Now last candle. Okay, so let's first analyze the candle. It's a small bullish candle. A small bullish candle in a manner that the high and the low of the candle are completely inside this the previous candle. I will not say engulfing. No. This is not engulfing. For the engulfing, because engulfing is a different situation. For example, this candle. Okay, and this candle. So this red candle has engulfed the previous candle. Okay, it's like eclipse. Okay, not absolutely, because the high of the candle was above the high of the red candle. Okay, so there is no engulfing, but here this kind of pattern. Okay, wherein the high and the low of the candle, it is not engulfing. I repeat, it is not engulfing once again. So this kind of pattern wherein the high and the low of the candle are still below, or sorry, are still in between the high and the low of the previous candle, indicates that the market is struggling. Simply, the market is struggling. Struggling in what manner? It's a bullish trend. Struggling in the bullish trend, struggling in the bullish manner. This means that unless S&P 500 breaches the high of this previous candle, the struggle, the weakness, the hesitation will remain in the picture. So I hope this is clear. And yes, one more thing. This does not indicate any gap down open or any gap up open. Okay. Now, Dow Jones. Dow Jones again on the daily chart also, it is in much better condition. How? If you look into the last candle, okay, again a good bullish candle, there was a heavy intraday retrace, okay, and the closing of this candle is above the high and the closing of the previous candle, and also the closing of this candle is at the peak, we can say. And also through this, the last candle, the Dow Jones made an all-time high at 43,325. 43,325. Okay, but the best part here is not about this candle, okay, alone. The best part is this one. What is this? This is the bullish breakout condition in the Dow Jones. Okay, although it was confirmed on these 2 days, okay, number one and number two. Okay, so that was the reason, okay, on Friday it sustained, okay, and it remained bullish because it was supposed to remain bullish, and there was no question of bearishness, okay, or any fall or so. Any fall supposed to be limited because the bullish breakout condition was already there, and now it is in a clear bullish breakout condition. Okay, because it is in a bullish breakout condition, it indicates, confirms continuation of the bullish movement without any issues, without any problem. So what we have seen in the S&P 500, there is a problem. Okay, it has to clear the high of the previous candle, but in case of the Dow Jones, there is no such foundation or no such thing. Now let's analyze the technical indicators on this, the daily chart. But guys, before that, once again, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you are looking for these daily precise updates of the S&P 500 and the Dow Jones every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. And if you want to make 5% to 15% on a monthly basis, then you can go for the products 4 stock market hacks, 8 stock market hacks with 95% accuracy. And once again, the accuracy is almost 100%. 5% is just the margin of error, like once in a blue moon. Okay, so I've given the link in the description of the video and also in the comment section. Now let's analyze the technicals. So in terms of the technicals, clear fan out. S&P 500 is bullish through the moving averages. S&P 500 is bullish through the Bollinger Bands. S&P 500 is bullish through the Ichimoku cloud. More technicals. So MACD is clearly bullish, and on Friday, because of this candle, okay, this some bullishness, stochastic RSI is also bullish. Again, the combination of the MACD and the stochastic RSI, okay, it will give, or it will provide the bullish momentum. It is neither overbought nor saturated. Okay, so overall the S&P 500 on the daily chart is 100% absolute bullish, and at the same time it is neither overbought nor saturated. Okay, now Dow Jones. In terms of the Dow Jones, same thing, clear fan out in the moving averages, bullish through the Bollinger Bands, and Dow Jones is bullish through the Ichimoku cloud on the daily chart. And other technical indicators, again same, MACD is bullish, stochastic RSI bullish. Okay, so almost the same thing is here in the Dow Jones. It is 100% absolute bullish, neither overbought nor saturated. So what does this mean, that it is neither overbought nor saturated but is still 100% bullish? This simply means that the bullish movement, bullish trend is going to continue. Okay, and as of now there is no fear because there is no overbought and this is the saturation condition. Yes, there was the overbought and the saturation on the weekly chart. This means yes, there will be a trigger. What kind of trigger? When the Dow Jones and the S&P 500 or any of these indices or both of these indices, okay, they hit that trigger. Okay, trigger means when, see, 100% bullish. Okay, but now when the bullish movement continues, more green candles, okay, or small thin red candles comes into the picture. In that case, the Dow Jones or this S&P 500, okay, they will hit the saturation and the overbought. Now this saturation and the overbought will be the trigger. Okay, and this trigger will then stop or will compel the means themselves, the indices themselves, okay, to not to go heavily on the weekly chart. This means that we can expect some, like bullishness or bullish candles, but not heavy. Okay, because soon they will hit the overbought and the saturation. Okay, but if you're my Patreon community member, then you need not to worry about it. Whenever it happens, okay, I will update you before it happens. So in this manner, the Dow Jones and the S&P 500 will work. Okay, but once again, there is a problem in the S&P 500, but there is no problem in the Dow Jones. And remember, Dow Jones is heading to the heavy resistance level, very heavy resistance level. Okay, and I'm not sure how the Dow Jones is going to beat, okay, or to move past or to sustain above this the heavy resistance level. Okay, it might take 1 2 days, 3 4 days, or 5 days, depending on the movement. Okay, how it goes on Monday, Tuesday, Wednesday, etc. But again, whatever will happen or whatever is going to happen, I will keep you posted through these daily precise updates if you are my Patreon community member. And if you are not, then you can join my Patreon community, because I give these updates pre-market, first, second, and the final update every day, Monday through Friday. Okay. I also give the stock market opportunities in the premium stocks of the US stock market, minimum 5 to 10 every week. And this is not all, because I also give the midweek update video. This is the technical analysis every Wednesday. And here I discuss in detail the movement on Wednesday, Thursday, and Friday. So guys, whenever you want to join my Patreon community, I have given the link in the description of the video and also in the comment section. And when you follow that link, then you will see that this is my Patreon page and this is my Patreon community, my Patreon profile. And here you will notice there are these 3 levels or 3 tiers. This is all midweek update videos, and these two are the daily S&P 500 updates. This one is daily S&P 500 updates for non-US and Canada residents. This is the daily S&P 500 updates for US and Canada residents only. So whenever you subscribe to either of these two, then you will be getting all midweek update videos, whatever is there. Okay, in here, so you will be getting that here. Also, you will be getting daily SP500 analysis, updates, movement, levels, zones, everything in detail. And also, you will be getting stock market opportunities, minimum 5 to 10 every week. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months, years, and they are getting these daily precise updates of the S&P 500, Dow Jones for the entire market every day from Monday through Friday, as well as the stock market opportunities and now the midweek updates. So guys, whenever you want to join my Patreon community, in order to get the same, then I've given the link in the description of the video and also in the comment section. You can follow that link and you can join my Patreon community, and you are welcome. Now guys, I'm going to discuss the third and the last point of the agenda of this S&P 500 weekly technical analysis. And here I will give you the probable movement of the S&P 500 for the next week, means from October 21st, which is Monday, to October 25th, that will be Friday. So now, first thing first, next week is blank. Blank, or you can say means there is a vacuum. Okay, blank or vacuum, because there is no significant data, okay, or significant earnings. But yes, on Friday means on October 25th, 2024, Friday, some economic data will be published, will be released, and this will be the durable goods orders data. Okay, again, our retail data. Okay, number one. Number two, on Thursday after market hours, Amazon will post the earnings. Okay, and because Amazon is one of the giants in S&P 500 and Nasdaq, this means that, and other than that, okay, Amazon is also an indicator, okay, for what? For the economy. Okay, So whatever Amazon is going to publish, okay, and also this the durable goods orders data, this means that Friday will remain volatile. It will be volatile. This means that on Friday we can expect an unexpected open, okay, a gap down or gap up open depending on the data and the earnings of Amazon. And then there will be a heavy movement, okay, in first hour. But after first hour, after 1 or 2 hours, the market will stabilize. And by Friday, whatever will be the movement or trend, bearish, bullish, short term, okay, whatever it will be, then after 1 or 2 hours, then that trend will be followed. As simple as that. Okay, no rocket science. Now this the S&P 500. The problem with the S&P 500 is that it has to breach and sustain above the high of this candle, which was also the all-time high, 5878.46. 5878.46. Okay, this is the only requirement. Okay, and this came into the picture, as I mentioned, okay, earlier, because of this special condition. Otherwise this wouldn't be necessary as such, right? Now this is the condition in the S&P 500. However, at the same time, if we notice, there is a bullish breakout condition in the Dow Jones, and there is no such obligation on the Dow Jones to breach this or that or so. No, so it will be heading to its heavy resistance level, very heavy resistance level. Okay, now what happens at that resistance level, okay, it will be known when it will be known only when it reaches near to, okay, that the resistance level. But yes, one thing is sure, or one thing is certain, that when the Dow Jones reaches to that heavy resistance level, then it will be struggling. It will be struggling. Okay, and there will be very good chances, very fair chances, that at least for one day, 1 or 2 days you can say, but at least for one day, there will be a red candle. Okay, and if it struggles more, then we can expect 2 red candles back to back. And the same will be followed, okay, here in case of the S&P 500. See, the bullish movement is open, the bullish side is open. There is no problem in the bullish side, okay, other than this particular condition, 5878.46. okay, breaches, moves up, closes, okay, then it's free. Now S&P 500 is at the junction, or it is very near to 5900. But because it has recently breached or has gained 5800, this means that again there will be some psychological pressure when it reaches to 5900. And also there is a resistance level, a normal resistance level, okay, a little below 5900. This means that S&P 500 will be struggling, okay, at around that level, okay, for a day or so. Okay, and then if it remains around that level, closes around that level or above that level, in that case next day it will hit 5900 with a force, or there will be a heavy bullish movement. Okay, so it depends on that level, okay, what happens. Otherwise the bullish side is open, 5900, okay, beyond. Okay, and in the Dow Jones the bullish side is fairly open. Okay, now comes the bearish side. Bearish side is simple. Okay, so for the bearish side to happen, okay, again the same thing, 5878.46. S&P 500 should remain below, okay, 5878.46, or it should keep closing below. It should keep closing below 5878.46. Then there will be the pressure. Okay, yes guys, I forgot. Okay, so once again, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you're looking for these daily precise updates every day from Monday through Friday, then also you can join my Patreon community. The link is in the description of the video and also in the comment section. And in order to get these hacks with 95%, 100% accuracy, and to make 5% to 15% on a monthly basis, okay, you can visit my Patreon page, my Patreon profile, okay, and you will find the hacks there, along with the options trading, options strategies, and everything. And there is one more way to get this the midweek update, which is published every Wednesday, and this is through YouTube. So you will notice there is this the join button. Okay, so when you click on this the join button, okay, below this video in YouTube, okay, then there will be a pop-up. In this pop-up you will see S&P 500 made week updates, okay, and then join. So you can click on this the join button, okay, and you can join my YouTube channel, okay, and you will be getting the midweek updates every Wednesday. Yes, so I was discussing the bearish side. Now in this the bearish side, okay, 5878, that as long as S&P 500 is trading below, okay, or is closing below 5878.46, it will remain under pressure. Simple. Okay. Now question is that when it comes down, then it will be coming down to what level or where exactly? Then for that the answer is very simple. As of now, any fall in the market, okay, will be limited, or it will be seen through the Dow Jones. This is the trend line of the Dow Jones. Okay, as long as Dow Jones is sustaining, trading, closing above, I'm saying closing, once again I'm saying closing, okay, it may happen that the Dow Jones will breach that trend line, will remain some time for some time below the trend line, and then it will recover, and then it will close above that trend line. That is why closing is important. Intraday breach, lose, okay, no, not that thing. When the Dow Jones loses the trend line, okay, closing basis, and if there comes two, see, if there comes one closing below the trend line, this means yes, there will be a weakness, okay, for next day or so. If there comes two closing below the trend line, then the bullish breakout condition will fail. Okay, so for now there won't be any more bullish movement, and then for next 2 to 3 days, okay, it will remain bearish. Okay, so trend line in the Dow Jones, and when the Dow Jones will be seen struggling to sustain at the trend line, wherever the S&P 500 will be, okay, or you can say the S&P 500 will be able to find support at these two strong support levels. Historically, okay, we have seen the same, okay, these two strong support levels, and these two strong support levels, okay, and it will coincide, okay, because see, this is the market, okay, and there are these mathematical formulas, models, and everything works on math, okay. So when Dow Jones will be struggling trading around this a trend line, at the same time S&P 500 will be around here, oh sorry, the moving averages of the S&P 500 will be here, okay, and whatever and wherever the S&P 500 will be, in simple terms, wherever the S&P 500 will be at the time when Dow Jones is sustaining, struggling at the trend line, then you can expect the movement accordingly. Because if Dow Jones closes below the trend line for one day, this means that there is a red candle in the S&P 500, and the next day we are expecting more weakness. Okay, if the Dow Jones sustains above, see, you need to understand one more thing. Okay, it's not just about green, green, green. Okay, no, it's about closing. There may happen that there comes a red candle. What? A red candle. Okay, but the closing is still above the trend line. So does that mean that it is bearish? No, absolutely not. It is bullish. Although there is a red candle, but it is bullish because it closed above the trend line. Just like what we have seen here, only by 20 points, the entire market, okay, retraced and went bullish. Okay, and just below the trend line level there is my heavy this the level, okay, heavy support level. This means that Dow Jones has the technical support. Dow Jones has the technical support. Okay, there is a trend line, and there is as well as, okay, a heavy support level. And if there comes something like some news, Middle East or something, okay, in that case it will lose, but there will be only one closing below that trend line and below the level. Okay, and when that happens, then there is another level, okay, it will be able to support the fall. That is why I'm saying any fall for now is expected to be limited. Bearish side is limited, bullish side is not limited. Okay, so this is what I'm trying to say. Because in the bearish side there are back to back, there are very heavy support levels in the Dow Jones as well as in the S&P 500. Okay, and the most important support level in the S&P 500 whenever it comes down, in simple words, 5,800. Okay, because it is a, see, it is not my calculated level, no, it is just a psychological level. It is just the psychological level, because whenever there comes a breach of 5,800, it can trigger more fall. Okay, so that is why 5,800 is a psychological level, and S&P 500 will remain reluctant to breach this level. So this means that as of now, any fall in the S&P 500 is expected to be limited to around 5,800. A breach in 5,800 means now we can expect more falls. In that case, there are many other heavy support levels. Okay, but there will not be any heavy fall. No heavy fall is allowed in the market, in the entire US stock market, whether it's Nasdaq or S&P 500, unless there comes two closings below the trend line in the Dow Jones. Because as of now, Dow Jones is the only index which is in the bullish breakout condition. Bullish breakout condition allows more bullish movement irrespective of anything. That is why unless there comes two closings below the trend line, we cannot expect any more bullish, we cannot expect any fall, okay, in the entire US stock market. Okay, this also means that even if the S&P 500 breaches 5,800, but at the same time Dow Jones managed to sustain at the trend line. So whatever fall, definitely there will be a fall, but that fall will then be contained, will be very limited, very restricted. There will not be any heavy fall. Heavy fall will happen, S&P 500 loses 5,800, Dow Jones gives two closings back to back below the trend line. This is a perfect condition for more fall. Okay, and yes, one more thing, if the S&P 500 trades below 5,800, in that case what will happen? In that case, whatever the high it has made, the S&P 500 will remain its all-time high, and then it will come down, and then at least for 1 week, it will not be expected to try for the all-time high level. It may try to move up because it is technically bullish, it is allowed to move bullish, but because of this, but yes, the all-time high level, no, it will not be able to move up or breach this all-time high level. But whatever will happen or whatever is going to happen, I will keep you posted through these daily precise updates of the S&P 500. If you are my Patreon community member, and if you are not, then I've given the link in the description of the video and also in the comment section. You can follow that link and you can join my Patreon community, and then you will be getting these daily precise updates of the S&P 500 every day from Monday through Friday. Also the midweek update every Wednesday, and also the stock market opportunities every week 5 to 10. And if you want to learn the stock market hacks through which you can make 5% to 15%, then this is the 4 stock market hacks, 8 stock market hacks plus modified technical indicators, options trading premium calculator. And remember, accuracy, I mentioned 95%, but it is actually 100%. 5% is just the margin of error for like once in a blue moon. Okay, but still it will be like 99% or 99.99% or so. So again, I've given the link in the description of the video and also in the comment section. So guys, hit like if you have liked this video, and if you have any questions that you want to ask, then please feel free to ask your questions through the comment section. So guys, this was my S&P 500 weekly technical analysis for the week of October 21st, means from October 21st, which is Monday, to October 25th, that will be Friday.